Hello everyone, welcome back to the homework channel. Today we're going to go through homework for chapter 13, short-term liability. We have two sets in this homework. One for payroll tax and the other for warranty. Let's take a look at payroll tax first. Here we have a company. Subject to unemployment tax, statewide 5.4%, federal rate 0.6%, and unemployment tax is charged to each employee whose compensation, each employee's first $9,000 compensation. Okay, and above that, there's no more unemployment tax. The federal income tax rate 12% applied to everyone. Social Security 7.65%. Okay, total rate. Among which we have a FICA tax 6.2% and Medicare 1.45%. Okay, FICA tax we do have a cap $128,040 compensation cap, above which we no longer charge the 6.2%, but there's no cap for the Medicare, 1.45%. Okay, we have 6 employee listed and their compensation until August. Okay, and their compensation for September. We are doing payroll tax for the month of September for these compensation. Okay. So I'm not going to go through everyone, just pick a few of them. For example, let's talk about Williams. Right, for Williams, income tax. Income tax, we apply the straight 12% on September compensation. For everyone, basically. And this is going to give us $96 income tax withholding for Williams. We're going to apply 12% to everyone, September compensation. Then we're going to calculate the FICA tax, including Medicare, Social Security, basically. We have two parts. Right, the 6.2% and 1.45%, because Williams' compensation is well below the cap, so we're going to apply the 7.65% directly. So it's 61.2%, $61.20 for the total Social Security. This is because Williams' accumulated compensation is well below the cap. Then we talk about unemployment compensation tax. If you look at Williams' compensation, it's pretty low. Until August, it's still below the $9,000 cap, which means we're going to still charge Williams employer unemployment tax until the accumulated compensation reached $9,000. So for September, I'm going to charge or withhold $400 for unemployment tax. For their state, that's 5.4%. or $21.60, and for the federal level, until that's $400. That's 0.6%, $2.40. All right. So basically, for the next employee rare, we're gonna do the same thing. And Ray's compensation is also below the $9,000 cap. So even with the September $700, right? It's still below the $9,000 cap for unemployment compensation tax. So the whole $700 is subject to unemployment compensation tax for Ray. Alright? So for Baker, the same income tax, FICA will be the same, but since Baker's compensation, accumulated compensation, is already above the $9,000 cap, so there's no more state and the federal level unemployment compensation tax for the September salary. The same thing for Lopez. Okay, but we're going to talk about Daniels, because if you look at Daniels' compensation, it's pretty high. Let's talk about Daniel. For their income tax, it will be the same. Okay, you can apply 12% income tax on Daniel's compensation. It will be the same. Income withholding, we apply the 12% on that. You're gonna get $1,440 income tax withholding. Okay, let's talk about FICA. This is because Daniel's compensation is pretty high. It may reach the cap in September. Okay, so let's do the calculation. It's compensation to August plus the September compensation. So we're gonna get $131,000. It's going to be above the cap. So we're gonna calculate the 6.2% and the Medicare 1.45% separately, because there's no cap for the Medicare, but there's a cap for the 6.2% FICA tax. Alright, so let's do that. So for the 6.4%, because it's going to be reached the cap in September, so we're going to apply the 6.2 partially for Daniel's September compensation. So that's going to be the cap minus the August compensation, and we're going to apply the 6.2%. So this is going to give us $582.80. Okay, then we calculate the Medicare. Because there's no cap, we can apply the rate on Daniel's September compensation. So if we add them together for Daniel's FICA or Social Security tax for September, it's going to be $756.80. Okay, and because the salary is pretty high, there's no more unemployment compensation tax for Daniel. For Kingston, we'll do the same thing. Okay, do the same thing. All right. So once we calculate everything, we can have the total numbers, and we'll be ready to record a journal entry. Okay, record a journal entry. So let's take a look at the journal entry we're going to make. So the first journal entry, we're going to make the salary payment. Okay, the salary payment, we're going to debit wages and the salaries expense. So basically we can add the total September earnings, the salary together, that's the total expense. Okay, but we do have some withholding first, the income tax withholding. And that become income tax payable once it's withheld. It's payable to the government. That's from this column. Okay, another deduction is the Social Securities. From this column. And then we have the cash payment to employee. And these state and federal unemployment compensation, they're not deductible from the employee's salary. They're paid by the employer, paid by the employer. So we need the next journal entry. The next journal entry, we're going to record the payroll tax for the employer. So we debit the payroll tax expense for the employer. It consists of the FICA tax because the employer is going to match all the FICA tax payable, the same amount. Okay, also employer is going to pay for the unemployment compensation tax. The federal employment compensation tax payable. And then the state. So the total payroll expense, if you add them together. All right. And in the last journal entry, there's a make journal entry to record the payment. Record a payment. Basically, the company is going to pay off all the payables, all these payables. So debit all these payables and then credit cash. That's it for the last journal entry. All right, this is for the first problem. So let's move to the next one, the warranty. And we know warranty is one of the typical contingencies, and that will be reported as a liability on the balance sheet. All right, so let's take a look at this question. So we have a company who sold 2,000 units and $3,000 each. And the company spent $100,000 servicing the 2-year warranties, and that is the cash they spent to the warranty service. Okay. and prepare the entries for the companies using the expense warranty approach. Assume that company estimates the total cost of servicing the warranty will be $260,000 for 2 years. All right. So first, we can record the sales journal entry first. The sales journal entry is very straightforward, right? Assuming we collect the cash, we debit cash, that's 2,000 units plus multiplied by the $3,000 for each unit. So we're gonna get $6 million cash, and that is sales revenue. And next, we're gonna record the $100,000 cash spending. Okay, obviously this is a warranty expense. And lastly, by the end of 2019, the company estimates the total warranty for 2 years will be $260,000. Remember, this is total warranty for 2 years, but we already serviced $100,000, which means we're gonna see another $160,000 coming the next year. Okay, so we expect that to come, and that becomes our liability. So December 31st, we're gonna debit warranty expense $160,000 and then credit the warranty liability. So expect to serve customer the next year $160,000. Okay, that's what we for the first part, for A. And for part B, then we change the question a little bit. Okay, so we say that assume that the warranties are not integral part of the sale, which means it's additional. It's part of the warranty. The warranty was purchased by the customer. It's not part of the sale. So it's a typical service type warranties. Okay, $300,000. It's a service type warranty. So it's signed warranty contracts. So we sold warranties to customers, but we haven't provided service yet. So the $300,000 become an revenue. Okay. Then the company estimate the total cost for the 2-year warranty will be $260,000 for 2 years. Then estimate revenue earned on the basis of the cost incurred and estimate cost. So let's record the first one. When we made the sales, we received the same amount of cash, but among which the $300,000 is unearned revenue. Okay, and our sales is $5.7 million. This service contract is unearned yet. The next journal entry will be the same, okay? And we spend $100,000 service customers, so warranty expense will be $100,000, and the cash $100,000. The same journal entry. And finally, by the end of 2019, we're gonna recognize this unearned revenue partially because we serviced, right, $100,000. So to recognize the unearned revenues, we're gonna debit unearned revenue, then credit revenue, or to be more specific, that's warranty revenue. How much? Right, it's based on the percentage completed. So we serviced $100,000, but the total expense for the 2-year service, based on the question, is $260,000. Okay, in other words, we finished this percentage of contract, and we're going to multiply by the contract price, $300,000. Okay, it's going to give us complete serviced contract or recognizable revenue, $115,385. So we're going to recognize warranty revenues, $115,385. Right? Okay, that's all we have for Chapter 13 homework.